You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means we're back once again with the Crypto Rundown, the program here on the Options Insider Radio Network, where we go a little bit beyond our traditional stomping grounds of your Tesla and your VIX and your SPY options. Look a little bit further afield, see what's going on out there in them thar crypto hills. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. We've been off for a week or so here. Don't blame us. Markets were closed, not the crypto markets, of course, but the rest of the markets were closed here in the U.S. last Monday for the Memorial Day holiday. But we're back, rearing to go. Of course, you guys, as always, if you're just listening to the Crypto Rundown, you're missing out on a whole heck of a lot. So head on over, especially for the audience of this program. Many of you are new to the world of options and derivatives, so you should definitely be checking out our Options Bootcamp, Options Playbook radio content, which is very much aimed on the educational side. So if any of these terms were thrown around like volatility and skew and all these things, they're a little bit intimidating, a little bit confusing. Those shows will get you armed and ready to go. And of course, if you want to join us for additional content, go above and beyond, like our great Pro Q&A sessions coming up. Another one coming up tomorrow. Every Tuesday, we have one of those. Every Friday, Options Oddities. Great giveaways. You want to join us live for this program and everything else that we do throughout the week. You know where to go. theoptionsinsider.com/pro. Welcome to all the new folks who've been joining us recently. It's a good time to be diving in on the old network as we kick things off by rolling out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Next up to the show is a newcomer to the program and indeed to the network. He is Drew Forman, the managing director and head of digital sales and derivatives over there at Cowen. Drew, welcome to the Crypto Rundown program.
For having me.
And Drew, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the financial and indeed crypto space, as well as what it is you do day to day over there at Cowen, sir.
Yeah, it's funny. I've been in options and derivatives in the equity side for over 15 years, and you haven't asked me to come on to your podcast until I started doing crypto. So
there we go. Now you're in the hot side of the space. Yes, it is funny. You're the first Cowen representative we've ever had on the network. So maybe we should even start there. Give our audience a bit of an overview of the background, what it is you folks do over there at Cowen day to day.
Yeah, absolutely. Cowen is a 100-year-old investment bank. We're potentially flying under the radar, but we're top 10, sometimes as high as top 5 in the U.S. In equities. We do everything from equities, fixed income, investment banking. And my job previously was running the derivatives and ETF group. I've been here for about 5 years, running derivatives and sort of moonlighting as a crypto degen. In late 2020, we formed the Cowen Digital working group, and that's what got us started on the quest to figure out our digital strategy. We officially went live this year, but we've been trading crypto since late last year. And I think we're one of the only, if not the only, traditional investment bank that's all in, trading spot and looking to do everything else in the crypto space.
Now, you mentioned you've been keeping your eye on the crypto space for a little while, even as you were doing the day job over there in the traditional derivatives moments. It seemed like a lot of our guests have had a similar background where they were trading usually options or derivatives of some type, and then they get lured to the dark side of crypto. They have some sort of inflection point, some sort of awakening where they say, hey, these markets are maybe more interesting than I initially thought. Maybe I should investigate them further. What was that moment for you, Drew? What was that inflection point that really lured you to the dark side of crypto?
I think in 2013, I had a friend who had been dabbling in Bitcoin and wanted to get me involved. And I wrote him a check for a few Bitcoin, and it was, a few $100s back then.
Yeah, it was like $5 back then, right?
Yeah, he gave me the secret keys in an email. And I actually forgot about it until Bitcoin rallied to, in the tens of thousands. And it was a mad scramble to find my Bitcoin.
I say, hopefully you found that key somewhere.
I found the keys, and in the process, I really got to know how interesting the space was and how elegant it was. And then, I was on the path, looking at Ethereum and all the altcoins and some of the shit coins. And now here we are.
Yeah, it's funny. In the early days, you mentioned the elegance. In the early days, it was anything but. You're right. It was wiring funds. It was going through a place like Western Union to send money to something like Mt. Gox. It didn't exactly ring of a reputable marketplace back then, Drew.
Yeah, exactly. And you know what? I think it's still, it's a little easier for retail players, but I think on the institutional side, it's still, the workflows don't line up to what people are used to doing in equities and other asset classes. And that's sort of the genesis of what we're trying to do at Cowen Digital. And that's why we've come into it. So I think it's come a long way, but I think the user experience really has a ways to go until we're going to see all the institutions involved.
Well, you guys mentioned you're an institutional bank that is really going all in on crypto. You announced back in March that you were launching your new digital asset division. Interesting timing. People have been dipping their toes in the crypto waters for quite some time. Why did Cowen decide now in March of 2022 that this was the moment to enter this marketplace, Drew?
We had been working on it for 18 months, and I think a place like Cowen, which is definitely big enough to be dangerous, but not big enough where you have such a large bureaucracy where it's really hard to get things through. Where you saw, Cowen has the entrepreneurial spirit where you can get compliance and legal and tech and sales all in a room to really come up with solutions. And we formed a separate company called Cowen Digital. You can't trade crypto inside of a broker-dealer, at least not Bitcoin and Ethereum, which aren't securities. And I think that's the reason you're not seeing the much larger banks get into the space, basically because they can't, and they can't get sign-off to trade inside of a broker-dealer, and it's hard to be nimble. But if you look at Cowen, and we've been sort of the leader in biotech in the early 2000s, and then in cannabis and stacks this year in derivatives, we're able to be really entrepreneurial and come up with solutions for our clients. So we were seeing the demand. We have a few thousand open accounts in equities, and we were really seeing the demand to trade digital assets, and our clients just didn't really have a great solution. I looked just before the podcast. There are 525 digital or crypto exchanges out there. Dozens of market makers, and really the institutional like platforms out there are built more for retail than they are for the institutional workflow out there. And that was sort of the catalyst, customer need and our ability to provide that for them.
We've been doing this show it's one of our newer shows. It still seems like the baby show to me, but it's been around for more than a few years now. So we were there right at the end of the first age of the crypto winter and then coming back into these mad swings and rallies we've seen over the past few years. But one of the through lines we've had on this show since its inception there, Drew, has been the institutional side. What kind of demand are we seeing from institutions? And we heard a lot of back and forth, in the latter portion of that crypto winter phase, a lot of firms thought maybe Bitcoin was a bit of a fad and they were washing their hands of it. And then as we've seen the big movements and rallies, we've seen other firms saying, no, we're getting a lot of crypto demand from institutions, and they were spinning up new arms and new divisions. So I'm curious for you, it sounds like you saw a lot of institutional demand because you spun up a whole new division to address it. But walk us through that a little bit. What kind of demand have you guys been seeing from institutional firms over the past, let's say, year or so? And also, are you concerned that now that you're launching this, maybe in the bit of a, dare I say it, a bit of a downturn in crypto, are you worried that might hit that demand a little bit?
So I think the momentum and the demand is definitely there and it's growing. Everyone from massive asset managers to long short hedge funds to sort of more nimble startups have crypto working groups or they're already trading digital. I think if you look at the large asset managers, they're mostly probably 3 to 9 months out from actually making large allocations to the space, but they've been involved for years on the VC side, and from that, getting tokens and having to understand custody and tokenomics, and also from the private investment space, really learning about the asset class and just not having a great vehicle to invest in it. I think on the multi-strat hedge funds, they're already starting to get involved. Some of them doing arbitrage trading, others looking at the space from sort of the long short side where you can buy certain tokens that are correlated to others and look at them as having payment streams. By no means I'm saying that they're securities, but you're seeing PMs that are focused on technology or financials equate these tokens to technologies of the future and are starting to look at them as such. And certainly the crypto natives have been there for a long time. And what we're really seeing is that we're able to provide the crypto natives not just trading services, but services like Cap Intro and thought leadership, and then connecting them to allocators and leaders in the space where they didn't have this access before when they were trading themselves on the exchanges. So I would say, a reason to be bullish is that some of the institutions are involved. A lot of them are looking, and the really large players are starting to look at allocating to this asset class, which is becoming potentially more uncorrelated to other asset classes.
Yeah, let's get into the assets a little bit because I'm curious. Looking at some of our live listeners in our live chat, they want to know the same question. They want to know if all your clients, are they pretty much all into Bitcoin right now, or are they starting to dip their toes into the altcoin universe as well? Where is that demand lining up right now, Drew?
We are definitely seeing people look at not just Bitcoin and Ethereum, but also a lot of the layer 1s and layer 2 scaling solutions. I think for the largest asset managers who are looking to deploy not millions, but hundreds of millions or billions, it's really hard to look beyond Ethereum just because of the size of this asset class and that there are not many assets to look at on that large scale. But in terms of fundamental accounts, as well as accounts looking at different ARBs and yield opportunities, especially with the ability to stake through us, we're definitely seeing, down through the top 10 and 20.
And you kind of touched on this earlier, but as you mentioned, ever since this division has been up and running, we've seen pretty much nothing but red on the screens of most of the major crypto assets out there. Has that impacted the demand you're seeing out there, or has that concerned any of your clients, or is it still pretty much full steam ahead in spite of the fact that we've mostly been selling off over the last few months, Drew?
I think it would be bad to say it isn't slightly concerning. What it is doing is sort of washing out the winners from the losers. We're seeing a lot of the projects that weren't robust or technologically sound fail. And we're also seeing a lot of, in the venture space, a lot of the projects that weren't great ideas and didn't have great backing, unable to raise money. And because of that, you're seeing a lot more quality in the space. There's certainly tremendous demand from allocators to allocate to funds, and there's a lot of emerging funds that are popping up that are raising money for smart strategies. We talk to a lot of market neutral and quantitative funds that sort of thrive on this volatility and are able to outperform and generate yield even more so in down markets.
Well, part of learning how to generate that yield in down markets is teaching the clients. And there's a lot of educational need out there. We see it with this show every week, Drew. There's a lot of educational need, even for people who are very experienced in the traditional marketplace, because the crypto marketplace, very different rules of engagement. It is still very much the Wild West, depending on which region you're located in, what type of regulatory environment you're trading in, what product. It's very much the Wild West still out there. So I know that's been a big focus for you guys over there at Cowen, Drew, is really trying to lead with the education first. So walk us through some of the educational offerings you guys are bringing to the table over there.
Absolutely. And I'd be remiss if I didn't give a shout out to my team. And we have a digital data scientist on staff. We call him our mad scientist. So he's keeping databases. He's doing deep dives on tokens. We have a sales daily note that goes out twice a week, which really gets into some of the news flow as well as relevant topics. And then we found that really bringing people together, either virtually or in person, is important. And we've had a series of fireside chats with the likes of Raoul Paul and Justin Drake. We recently did one with John Wu, a deep dive. He's the founder of Ava Labs, which is behind AVAX. We did a deep dive with him on the AVAX chain. And we continue to bring leaders into the space to offer education. We're also very much doing presentations on 101 and what is Bitcoin. And people are always asking, what are NFTs and how do I get involved? And which ape or gorilla do I have to buy this week? It goes from that, the crypto curious, to the in detailed analysis like we did with Ava Labs.
Interviewing thought leaders in the crypto market. You're coming from my job, Drew.
No, absolutely not. This is for you. Be happy to make connections or come on with any of them.
There's room for everybody out here. But interesting, I was down at the options industry conference a few weeks ago when all the news and all the drama broke on the stablecoin front. Of course, all the UST Luna madness out there, which wiped out billions of dollars worth of market cap and raised a lot of questions about these stablecoins going forward. I know I was down at the industry conference at the time, so a lot of institutional folks were discussing this. It was very much the hot topic of the week out there. I'm curious for you, Drew, as you've been interacting and engaging with a lot of the institutional clientele out there, were they a little bit shocked by that big meltdown and wipeout of market cap that we saw as a result? And has that had any impact on institutional interest or demand for the crypto space going forward?
It definitely was newsworthy and everyone was talking about it. The saving grace was it sort of played out as it was supposed to, with this failing with the rest of the market not completely going down. Terra Luna was certainly an interesting and potentially elegant solution to the stablecoin question, but it failed. And what I think people are very much focused on is counterparty risk. I'm aging myself by having gone through the Lehman and Bear Stearns crisis, and back in 2008, 2009, you had risk on the books that apparently you didn't even know you had because of certain counterparties that you deemed not to be failing. So I think this really makes the risk teams, the compliance teams of these places nervous, and they really have to button up and only deal with trusted partners. I think having segregated custody, having a trusted trading partner, having your hot wallets be small and in places where you're comfortable having your assets not get hacked or any of that is very important. And, as we're seeing this shake out, there certainly are winners or losers, and the system is changing.
Well, I appreciate you taking some time out of your day, Drew, to join us here on the Crypto Hot Seat. But before we go and keep on rolling with our show, perhaps you'd like to leave our audience, leave them wanting more, Drew. Leave them with a little bit of a hint, a little bit of a tease of what they can expect from you guys and the newly launched digital asset division over there at Cowen. Now is the time, sir. The floor is yours.
Well, I just want to say thanks a lot for having me. This was a lot of fun. At Cowen Digital, we're looking to mirror everything we do at Cowen in traditional finance, everything from trading, algorithmic trading, lending, derivatives, advisory, and education. So I encourage anyone to reach out. My team and I will be at Consensus and most of the crypto conferences, or you can reach out over the internet, snail mail. But would love to speak to everyone and continue having this conversation.
And if folks want to learn more or see what you guys have up your sleeves over there at Cowen Digital, where should they go? What should they do, Drew?
They can go on the website at Cowen and they can access me that way, or send me an email, drew.forman@cowen.com, and I'd be happy to respond myself.
There you go. Reach out with all your questions and comments. Meanwhile, we have to keep on rolling. It is time to explore the Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. Always great to see storied old school firms like Cowen getting into the crypto space. You know, we've had a lot of new and startup firms here on this network in the crypto world over the past number of years since we've been doing this show. But again, it's always exciting to see firms that are firmly entrenched in the traditional institutional space getting into the digital asset space, because they're going to bring a lot of interesting institutional clients with them. And they have a good finger on the pulse of what's going on in the institutional space. So that's intriguing. Certainly interesting time to be launching as well, right in March of this year, when we now have firms like Gemini and others saying the crypto winter 2 or 3, whatever number we're on now, is upon us. So interesting stuff afoot. We'll certainly keep an eye on that as we dive right on into the Bitcoin breakdown. And remember, listeners, we're going back a couple of weeks now because we were off last week for the Memorial Day holiday. So Bitcoin kind of shrugging its shoulders since our last show. We were just a tick north of 30,000 this time 2 weeks ago, 30,082 to be precise. A little bit north of that today, 31,361. So, 1,000 points and change, nothing to sneeze at, but it's not the most aggressive move we've seen in the history of this program. Before we move on, let's look back over the past week, see how low we did get, and got down to about 29,455 out there. That was on June 3rd, and the high was a little bit north of 32,000. 32,107. Getting out to the Bitcoin vol listeners, and pretty much the answer for all of these questions in terms of what's going on is lower across the board. Bitcoin vol, by the way, all these analytics coming at you courtesy of our friends over there at Genesis Volatility. gvol.io is the place to go to kick the tires and light the fires, listeners. If you do so, you'll be able to run all these numbers for yourselves and a whole bunch more. The vol, the skew, the OI, the unusual activity. You can run it over any time frame you want. We are literally just scratching the surface here when we do this show of the amount of analytics that are at your fingertips over there. So check it out for yourselves. gvol.io, gvol.io is the place to go. If you did that, you would see that the current average at the money vol across the term structure there in Bitcoin is now at about a 60. That's a whopping 10 points below where it was just 2 weeks ago. We were at a 70 2 weeks ago, 60 today. That's getting pretty low for Bitcoin, listeners. Bitcoin, we've said it many times on this show, it's kind of been parodied now in broad popular culture. Many shows have joked about just how volatile cryptocurrencies are. A 60? That's not that volatile compared to a lot of the assets we talk about on this network. Pick your poison. It could be a meme stock. It could be a hot commodity like a natural gas, whatever it might be. Many of them will frequently move into and hang out in the triple digits for quite some time. So a 60, it's certainly frothy. I mean, by way of comparison, broad equity vol in terms of the VIX is in the mid-20s right now. So it's still much more volatile than your broad equity volatility. But in terms of the most volatile asset we talk about here on the network, it's really not even close right now. BitVol, which is, of course, our friend Simon Ho's effectively Bitcoin VIX. It's a 30-day rolling measure of vol out there with a little bit of skew baked in there as well. On our last show, it was 84.43. This show, a whopping 68.29. That came in over 16 points over the course of our last show. So again, if there's a theme for this episode, it's lower, at least from a vol and analytics perspective out there. In terms of the skew, last week 2 weeks ago now, really, on the show, we were pretty negative still, about a negative 9.8. People were still pretty spooked. We had just kind of rebounded from an aggressive sell-off. Remember, it got down to, I believe, in the mid-20s, if not low 30s, from a negative skew perspective, and we were really selling off hard there in Bitcoin. And then it had just gotten back to about a negative 10 level on our last show, which is where it was 2 weeks before that. So we were at about a negative 10. Then we sold off hard in the intervening week, got very negative in the skew. Then we finally came back to about a negative 10 2 weeks ago. This week, 2 weeks later, a little bit less than that, about a negative 6.6. So it's still bearish. Still the concern and the premium is to the downside. But nowhere near as aggressive as it has been over the last month. Let's look at the bit skew. That's Simon's kind of rolling measure of skew out there. And his metric is about unched. 2 weeks ago, it was 99.6. Coming into this show, it was pretty much exactly 100. So not a lot of evolution on the 30-day skew out there. Getting on out to the open interest. What's been going on since our last show? Remember, since our last episode, listeners, May has rolled off the board and taken some OI with it. Coming into showtime now out there on Deribit, which is still the leading venue for crypto derivatives. We see the calls, about 130,000 contracts are open on Deribit right now. It's down 8,000 from this time 2 weeks ago. The puts, 88,000. That's down about 4,000. Let's see where you folks are lining up from an expiration perspective. And it still is June, which has been leading the dance for a while when it was just the front quarterly. Now it is the front month, so expect it to rocket even higher from an overall OI perspective. Right now, it's at 88,500 contracts open. It's up about 13,500 from this time last week, followed by number 2, September, 36,000 contracts open there. It's up about 4,000. And the newest addition, taking the May spot in the top 3 this week, is December, 26,000. So if you're paying attention, that's all quarterlies all the time, which is pretty much in line with what we've seen in the past. Crypto, ETH more than Bitcoin, but both of them tend to aggregate around the quarterlies for a wide variety of reasons that you don't see in a lot of the traditional equity options market. Let's see where your folks are lining up. What are the top 5 positions right now out there in Bitcoin options? Let's find out. Number 5 is the 70,000 strike. So again, we were just hovering right around the 31,000 strike coming into the start of the show. And it's the 70,000 making a new entrance into the top 5 this week with 9,300 contracts. That is not a lot, but it's enough to break into the top 5 on a relatively light week. Number 4, we have the 60,000 strike. So still the, dare I say it, optimistic paper lighting up the tape out there in Bitcoin land this week. 10,000 contracts open. That is down 3,000 from this time last week. Number 3, the 40K strike. That has 11,000 contracts open. That is unchanged from 2 weeks ago. So not a lot of evolution on the 40,000 strike. Number 2 and number 1, they are tied yet again. They were tied 2 weeks ago as well. It's the 20,000 and the 25,000 strike. Both of them have 13,000 contracts open this week. They're both down 1,000 from 2 weeks ago because they had 14,000 open on our last show. So yeah, it's still a tie for the number 1 spot. And dare I say it, some more relevant strikes at the top of the list, which is interesting to see. We're not seeing the 100,000 or even the 200,000 strikes the way we used to towards the end of last year. In terms of the paper we're seeing right now, it hasn't been the busiest of periods since our last show. The busiest day was the 30th of May with about 22,300 contracts, which is actually pretty light. You got to go all the way back to mid-April before you find a day that is less than that with around 19,000 contracts. Every other day since then has been north of 28, if not into the 30s, into the 40s, even in mid-May when we've got those crazy sell-offs. You got up to 46,000 contracts. Nothing quite like that over the past couple of weeks. Let's get on out to CME land, see what they have lighting it up out there. On the Bitcoin options front, the big ones, again, not a heck of a lot of paper hitting the tape. 40 contracts going up last Friday. The OI down 420 contracts to about 24.39. On the futures front, same deal. The big futures haven't really been blowing the doors off of late. Seems like a lot of the interest, understandably, has been migrating towards the micro stuff. 6,620 contracts going up on the last trading day, which was last Friday. And the OI is down 600 to 11,473. So again, not a ton of paper out there. Let's go out to the micro. Let's see if anything else was, and more paper was going up out there. And actually the answer there was not a heck of a lot either. It's kind of a quiet week over the last couple of weeks. We saw that big blow off to the downside. Then it seems like folks are kind of spent, keeping their powder dry for a little bit because we're seeing the volume kind of light on the micro Bitcoin futures of CME as well. Only 8,000 going up on Friday, and the OI was down a whopping 9,000 to 14,300 since our last show. That's a big move. As we keep on rolling, let's see if there's some big moves in store for us in the altcoin universe as well.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, where we explore everything outside of the big dog. That is Bitcoin, except for right now when we talk about the top 10 from a market cap perspective. And that's always going to include Bitcoin at number 1. Let's see what number 10 is this week. That's where the interesting fight and or evolution has been going on in the altcoin universe over the past couple of months, as we're seeing just a race to the bottom out there. And who can hold on to the number 10 spot this week? Let's see. This week, once again, it is Doge holding on by the slimmest of margins. Doge with a little bit shy of 11 billion, 10.9 billion worth of market cap right now. Again, that's very light to be able to break into the top 10. Not that long ago, before the big meltdown, cost a lot more to break into the top 10. These days, not so much. Number 9, Solana, 14.2 billion. Number 8, Binance USD, 18.25 billion. Number 7, XRP, the will they, won't they of the crypto space, 19.2 billion. Number 6, Cardano, 20.2. A lot of 0.2 billions going on this week. Numbers 5, we got BNB, 49.2 billion. Number 4, USD coin. Oh, breaking the trend here, 53.8 billion. Number 3, Tether, 72.5 billion. Numero 2, it's ETH, 225 billion worth of market cap. And number 1, a little bit bigger than it was on our last show 2 weeks ago. It's the BTC with about a little bit shy of 600 billion worth of market cap. Kicking off the show here, we are seeing ETH a little bit lighter than it was 2 weeks ago. On our last show, we were just north of the 2,000 handle, about 2046 to be precise. Coming into today's show, we were at 1856, so down not quite 200 points, about 190 points from where we were this time 2 weeks ago. In the interim, we got as low as 1743, and that's an interesting level. I know, going back to the earlier days of this show when ETH crossed 1700 the other way, going to the upside, that's when I know a lot of you kind of, your ears really perked up and you thought, hey, maybe there's something to this ETH thing. Now we're threatening that level again in the other direction since our last show. The high pretty much was our last show when it was 2,046. So not much north of the 2,000 level since then. Let's get on out to the vol levels. And like I said, the theme for the show is pretty much mostly lower, at least from a vol perspective. And that's the same case in ETH. Coming into showtime, we had about a 72. ETH, usually structurally more volatile than Bitcoin. That remains the case, but it is still down from 2 weeks ago. Last time it was 78, so it's come in 6 points versus a full 10 points on the Bitcoin front. Skew-wise, things are still negative, but not quite as negative as they were 2 weeks ago. Last show, we were at a -9 in in ETH skew. This week, -6.9. So coming in a little bit, but still pretty negative. Let's go out to the OI. Same deal with ETH, May rolling off the board. Let's see if that's taken a good chunk of the OI with it or if they've managed to replace it. And on the call side, that seems to be the case. There's 1.8 million calls open on Deribit right now. It's actually up 150,000 contracts from 2 weeks ago. So new call positioning has come in to replace May. Not so much on the puts. Maybe the fact that we've, at least for the time being, maybe mitigated some of that sell-off. The puts going back down. The puts, 691,000 contracts open. That's down 111,000 contracts from this time last week. So I've said it before. I'll say it again. It does take a pretty aggressive sell-off to kind of get those puts to come to life from a vol and a skew perspective. And if we don't hang out and keep testing those lows, it seems like that life doesn't last too long. That's kind of what we're seeing right now. The puts going the way of the dodo, at least for this past week. In terms of action, the busiest day, kind of similar to what we saw on Bitcoin. Nothing really blowing the doors off compared to what we saw back in the middle of May when we saw nearly 500,000 contracts going up on Deribit, 461,000 contracts. We're still in the 200K range for the better part of the last couple of weeks. Nothing really blowing the doors off there. Let's go out to the expiration cycle, see where you folks are lining up this week. And very similar to Bitcoin, ETH always had a strong desire to line up on the quarterly side, and that's pretty much the case again this week. We have June with the top spot, 784,000 contracts open there. It's up 105,000 contracts from this time last week. Number 2, September, 514,000 contracts open there. It's up 136,000 from this time last week. And kicking into the number 3 spot for the first time, December, 412,000 contracts. So again, all quarterlies all the time. Will that change? Not with June as the front month. June's going to be leading the dance for a while. Once we get beyond that, we shall see. But right now, it seems like it's all quarterlies all the time. Let's look at the top 5 positions, see where you folks are lining up right now. What are the size open positions in ETH options right now? Let's find out. Number 5, the 3,500 strike. That has 124,000 contracts open right now. That's a newcomer to the top 5 this week. So that's an interesting one. And again, dare I say it, a more slightly relevant strike. It's not quite that close, but it's closer than some of these others. Like number 4, the 6,000 strike with 124,000 contracts. We actually saw some new positioning there. It's up about 2,000 over the course of the past 2 weeks. Number 3, it is the ever optimistic 10,000 strike that has 147,000 contracts open there. That's actually up 4,000 contracts since our last show. So new positioning on the 6K and 10K strikes. Number 2, the 5,000 strike, 151,000 contracts open. That one coming in a bit. That one's down about 11,000 from our last show. And the number 1 size position in ETH options this week, the 4,000 strike that has 188,000 contracts open. That's up 14,000 contracts from this time last week. So unlike Bitcoin, where we saw, dare I say it, some more relevant strikes fighting their way and actually taking the top spot. In Bitcoin, we have the 20 and 25,000. You got to go all the way down to number 4 to find the former high, which was around the 60,000 level. In ETH, bit of a different story. The near former high, which was around 4,400, 4,600 with ETH. The 4,000 strike is the closest to that. That is number 1 still in ETH with 188,000 contracts. So a little bit of a different story in the ETH OI than it is in the Bitcoin. Let's go out to the CME ETH futures, see if anything lighting it up out there this week. And, the answer there is kind of similar to what we saw on Bitcoin. Not a heck of a lot. The big ETH futures only doing 3,700 contracts on Friday, and the OI down a whopping 100 contracts to 3,300. Let's see if the same deal is going on out there in the micro ETH futures. These things were blowing the doors off quite a bit. The OI exploded on our last show, got up over 90,000. It seems like that might have been a blip because it's right back down another 63,000 contracts this week to about 27,000 again. So it shot up to 90,000 and right back down to 27,000. Not sure what's going on out there, but intriguing, very short-term paper. Obviously, we saw that aggressive sell-off. So maybe a lot of folks were piling into the puts out there either way, or just a lot of folks are piling into bearish positions in the futures probably and maybe taking those off. Either way, not a heck of a lot of action this past week in the micro ETH futures. Only 7,500 contracts going up on Friday. Intriguing stuff. Let's run down some of the other altcoin universe and we'll get out of here for this week. Listeners, XRP again. Everyone's kind of waiting for some sort of determination, finality out there on XRP. It's at about a 39.60 when we came into today's show. That's down a little over 2 cents. It was a 41.76 on our last show. Dogecoin still weaker. It was 8.6 cents on our last show 2 weeks ago, 8.1 cents this week. So down about 0.004 to be precise. Then we've got Litecoin. Last show, 72.36. Coming into today's show, 64.09, down a whopping 8.25 from our last show. Cardano, actually bucking the trend. It was 54.6 cents on our last show, 59.9 today. So managing to actually be up about a nickel. Polkadot today, $9.50. 2 weeks ago, $10.50. So down about $1. Solana, this one has come under a lot of pressure of late. It was 52.91 on our show 2 weeks ago. Today's show, 42 even, down nearly 11 handles from where it was 2 weeks ago. Solana has come under assault. I know they had some outages and some other issues that were driving it lower, in addition to all the macro forces that are just sucking crypto lower as well. It seems to be really hitting Solana very aggressively out there right now. And good old Shiba Inu, all those folks out there who were waiting and perhaps hoping for the Shiba Lambos. We were 0.000012 on our last show this week, down to 0.000011. All right, everybody, that music means we have come to the end of another interesting sojourn through the world of crypto. Before we go, I do want to pay off. We had a very fun poll on the show last week that was inspired by our guest, Mr. Bill himself from Senecal Capital. He kept talking about Bitcoin as a Marvel character. So we thought we'd throw that out to you last week on the show, or 2 weeks ago now. Seems like an eternity ago. If Bitcoin was a Marvel character, which one would it be? And we gave you 4 choices: Wolverine, Magneto, Mystique, which was his suggestion, or Rocket Raccoon. We were trying to think of some of the more ridiculous characters. And it seems like you folks got into a bit of a heated tie. It ended up being exactly tied, 44.4% each, between Magneto, so you see it more of a bit of a villain, and Rocket Raccoon. You see it as a ridiculous raccoon space animal. Only 11.1% for Bill's suggestion of Mystique. Not a single vote. 0% for Wolverine. That was surprising. I thought we'd get one out there. Someone who's a Wolverine fan had to just throw it out there. But no. Magneto and Rocket Raccoon, a tie. How often do you hear that? And also, we had a poll a couple of weeks ago we didn't have a chance to pay off here, which was we asked you guys, which level you think Bitcoin's going to hit first? 10K or 60K, or you just don't care, or you're out of crypto. And 46.5% of you said 10,000 first. So that would firmly bring us back into the realm of crypto winter, which, if you believe the Gemini folks who are under investigation right now, so maybe take their word with a bit of a grain of salt, but they say we're already in the crypto winter, so intriguing times right now. But 46.5% of you sound like you agree with the 10K level first, followed by 30.2% of you saying 60,000, and about 23.3% of you following along with Russell Rhodes, who said on our Pro Q&A last week that he's sold all of his crypto. He's out. 23.3% of you said you're out of crypto or you just don't care anymore. So intriguing. That maybe some of you getting shaken out by this, which is always interesting. We saw this the last time there was a crypto winter as well. The folks who were kind of just dabbling with it washed their hands of it. We'll see if that will that cycle repeat itself. The folks at Cowen certainly think so, because they're diving with both feet into all things digital. I want to thank them for joining us. Check them out for yourselves. You know where to go to find them. Cowen, COWEN is the place to look for them online for all their digital solutions. Remember, check out our friends over there at Genesis Volatility. gvol.io is the place to go to kick the tires and light the fires. If you have more questions about all things, let's say on the commodity or indeed the futures, options, and futures side, then join us if you're in the pro side. Join us tomorrow for our Pro Q&A session with Mr. John Brady. He likes to talk about rates and all the futures action going on there and options action, but also I'm sure we'll get into crypto and the commodities. I mean, nat gas has been blowing it up. How can we not talk about that? So, but hey, it's your session. Whatever you guys have questions about, start getting them in now for tomorrow's Pro Q&A session. Then for all of you folks out there who want to learn even more about these crazy options things, we're back live with Options Bootcamp and Options Playbook Radio. Brian and Dan back from their travels this week, so a lot more educational content coming at you there. Thursday, we have episode 2 of the Option Block, as well as This Week in Futures Options, another show that if you're listening to this one, you certainly will be intrigued by. Friday, of course, Volatility Views, and then for all you pro cats, we've got Options Oddities coming up after that. Then we're back again next week, another episode of the Crypto Rundown. Stay safe out there, everybody.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.